watching Daybreak Asia, coming to you live from New York, Sydney and Hong Kong.
We're counting down to the opens in Tokyo and Seoul.
Australia has just come online. The top stories this hour. US stocks and treasuries suffering one of their worst ever tandem tumbles to begin the new year. Bank of America says a January rout in mega-cap tech is now the consensus view. Tesla's deliveries beating expectations, but not by enough to keep China's BYD from taking top spot in global EV sales. Plus, the search for answers after a fiery airport collision in Tokyo kills 5 Coast Guard crew heading to the country's earthquake zone.
Well, Heidi, we're just tracking the ASX 200, how it comes online this morning. We are seeing a little bit of weakness creeping through, so the benchmark unlikely to hit that fresh record high that we have been tracking. But just to note, for the intraday level, we're watching for 7,632, and that would take us back to the levels that we haven't seen since August of 2021. As I said, futures have been indicating a drop of nearly 1% in the session today, so unlikely to reach that mark. But when you do take a look over a bit of a longer-term horizon, an interesting call coming out from Citi earlier this morning saying that the rally that we've seen in iron ore shares should continue into the first half. And of course, it really has been the miners, banks as well, that have been leading those gains in the benchmark. But today you can see fairly steady trading. But of course, a lot of traders still away from their desks. That holiday season is extending as well in Australia, and trading volumes very thin to start 2024. Not really seeing much movement either in the currency space, in bonds. But let's change on, take a look across the rest of the region. Because broadly we are setting up for some weakness to come through in the session today. You can see here Kiwi stocks online back after an extended break to the downside. China futures as well looking a little bit weaker. We did actually see again that worst start to the year for mainland equities going back to 2019. So concerns still building around the health of the Chinese economy. Otherwise, not too much a direction coming through in the currency space. The Japanese yen, little change there, but you can see, of course, we have seen a lot of natural disasters to note in Japan, and also perhaps human-made ones as well, but Japanese markets are shut, equity ones until tomorrow, Shery.
Well, not a great start for U.S. stocks on the first trading session of 2024 either. In the New York session, we had the S&P 500 falling. We had the Nasdaq 100 seeing its worst day since October. We're seeing U.S. futures coming online unchanged at the moment. The VIX jumped the most since mid-December. That was the first time when we had that sort of signaling by the FOMC about the pivot towards easing this year. But it seems that traders are trimming those bets of rate cuts for this year, 150 basis points priced in, which is sort of less than what was expected last week. So we had treasuries also falling, the 10-year yield gaining ground above that 390 level. We're really watching some of those corporate names as well, because we had Apple seeing the worst day since September, Barclays cutting the rating to underweight because of lack new features, not to mention a tough backdrop for the iPhone. We were also watching JP Morgan, though, because banks gained ground in today's session, and JP Morgan finished at the highest level on record, so really bucking today's trend. But really the trend was broad risk off. So we had the dollar index gaining by the most since March. That also pressured the oil space. Right now, WTI coming in a little bit higher to the upside of 0.2%. And of course, Heidi, we do have the escalating tensions in the Red Sea.
A lot of uncertainties to be contending with right at the start of the year, right, Shery? And our next guest sees easing inflation, a soft-ish landing for the world economy in 2024. Joining us now here in Sydney is Andrew Ticehurst, as a senior economist and market strategist at Nomura. Andrew, happy New Year! Great to have you with you. Great to have you with us, I should say. Also great to be here with you. But it sounds like a kind of a muddling through situation for this year.
Well, look, first up, thank you very much, and happy New Year to you too. Our view is pretty much a consensus-ish view in that we see growth moderating, inflation moderating, and central banks delivering rate cuts as we proceed through the year. But we're on the cautious side relative to that pretty solid consensus. So we've got mild technical recessions in the US in the second half of the year. We think Europe's already in recession. And we do have inflation coming back to target in the US. That's a good news story. Unfortunately, we think they're going to get there via a mild recession. We've got rate cuts coming coming from about the middle of the year.
It's interesting when you talk about a mild recession, because even with the economic resilience that we've seen across a lot of economies, that hasn't necessarily been felt in terms of optimism from households or consumers or homeowners, right? Does that mean even a mild technical recession will be felt more harshly by the consumer?
Look, I think what the consumers are really feeling right now is just the impact of high inflation, plus a little bit of bracket creep for countries which don't index their tax rates. Higher wages push people into higher tax brackets, and that's certainly something we're experiencing pretty powerfully here in Australia. So, yeah, look, mild technical recessions, consumers a bit cautious. We think interest-sensitive sectors are going to feel some pain. I think margins are likely coming under pressure, so we've got CapEx softening up a little bit generally in many places, including in the US too.
We are actually hearing from PM Albanese talking about, wanting to ease cost pressures without fueling inflation. Obviously, cost of living is front and centre. At the same time, you've got the ASX 200 just a couple of points away from a record high, 5 points away from an all-time high. Do you think that's warranted, particularly for a market that's been driven by optimism ultimately over China?
Look, what I would say is there's a lot of good news in the price, looking across all asset classes. So we saw, of course, very powerful rallies in equity markets over November and December, commodity prices higher, US dollar lower, $1 higher, credit spreads tighter. So across all asset classes, a lot of optimism now in the price. It feels like we're coming into the new year and now, of course, and we're already seeing a very the start of a reset, perhaps. So we've got some key US data coming up this week. Markets have moved a long way, and I think we're just pausing for breath now and looking to the US data and key indicators over the next couple of days. We've got a manufacturing and a service sector ISM data. We've got another jobless claims print. We've got Fed minutes, and of course we've got payrolls. So I think really after the powerful moves through November and December, we're just pausing for breath and waiting for some of that US data. The other thing I'd just quickly throw in is that with the new year, we're seeing a big kickoff in corporate supply, including supranational, sovereign and corporate issuers, and we've got the US Treasury coming back to the market next week as well. So that's, I think, another reason for the caution in the bond market here.
When you take a look at fundamentals that drove, say, the Japanese market last year, are they still intact for this year? Are there sort of areas of bright spots that you're liking across Asia?
Yeah, look, we are cautiously positive on Japan. I would say the data that I saw through the course of December, the Tankan survey, IP, machinery orders were all a little bit better than expected. Our colleagues in Tokyo are cautiously optimistic that a positive wage price spiral is starting to build in. We think this round of Shunto wage negotiations in Q1 will be a little bit stronger. We think that paves the way, by the way, for the BOJ to pull back on some of its extraordinary policy accommodation through January and April. For AEJ, we're relatively upbeat too, certainly more so than for Europe and the US. The tech cycle looks pretty good, and the Asian economies, in our view, look like they're in pretty good shape. I guess the one area of caution across the broad Asia region where we'd be flagging is really China. So we think China's going to remain subpar, another little dip through the coming months. Latest data is not super encouraging. So the first half of the year, I think, is going to continue to be a challenge for China.
Political risk, geopolitical risk, geostrategic risk, immense even before we got into this year, right? And this year, it's massive for elections, starting off with Taiwan in a few days and then ending with November with the US presidential election and a lot more in between, right? Is that a risk that you're assigning that could potentially, turn things upside down?
Yep, absolutely. I believe there's a record number of elections this year. Taiwan is the perennial, perpetual, kind of like low-risk sort of focus that we need to keep our eye on. But I think probably the US election is going to increasingly dominate focus over coming months, and certainly by the time we move towards the middle of the year. The possibility that Mr. Trump could be re-elected, the geopolitical isolationist kind of policies which could potentially follow from that, a ratcheting up of negative rhetoric with respect to China. These are material risks that I think we need to keep our eyes on.
Andrew, great to have you with us, and a happy new year, and great to have you with us at the start of what's going to be a very interesting year either way. Andrew Ticehurst, senior economist and market strategist at Nomura here in Sydney. Well, still ahead, Japan is reeling from its second disaster in just 2 days, a fiery airport collision involving a passenger jet and an earthquake relief flight. We get the latest on that story next. This is Bloomberg.
Welcome back. Crash investigators in Japan are searching for answers after the country's second disaster in 2 days. A runway collision between two planes in Tokyo killed 5 people who were setting out on a relief mission to the country's earthquake zone. Joining us now from Tokyo is Bloomberg's Kurumi Mori and Isabel Reynolds. Kurumi, let me start with you because you're right now at Haneda Airport where this crash happened. What do we know at this point?
Yeah, just a terrible start to 2024 in Japan. First, that massive earthquake, and now this plane crash just a day later. We're standing here at Haneda Airport where that crash happened, as you mentioned, Jerry, and we're seeing travelers here still stranded, and some of them are awaiting some of the flights to resume. We're hearing at least the domestic flights, about 10% have been canceled, and so people here are scrambling to try to figure out their travel plans. But again, the biggest problem, the biggest question we're facing now is what caused this. The latest we know, according to local media, is that JL-516, the Japan Airlines bigger aircraft, was cleared to land. The Coast Guard aircraft, which is a smaller Bombardier Dash 8, was cleared to move to the runway. There's no clarity on exactly where in the runway they're allowed to move towards, but we are getting some indication that there may need to be more of a deeper dive into the communications of traffic air control.
Kurumi, what do we know as sort of the next steps and how this plays into the rescue recovery effort that we're seeing?
Right. So the French and Japanese authorities are now investigating what happened. They're on site. French officials reportedly are flying in today, Wednesday, to be part of the search for the answers here. Clearly, you know, all 379 people on board of the Airbus, the Japan Airlines flight, were able to evacuate, but we did have 5 people who died on the Coast Guard aircraft. The only surviving was the captain, the pilot. He has regained consciousness, but clearly has sustained severe injuries. And so the answers hopefully will trickle down to us as we get more details. But again, this is still under investigation. Nothing has been confirmed. Government officials have repeatedly said that nothing is confirmed yet, but they are looking into now the communications of air traffic.
Isabel, as Kurumi mentioned, those people who were killed in that crash, of course, were headed towards the quake area for disaster relief efforts. How is that ongoing right now?
Yes, well, yesterday we saw the local government, the local authorities in the Noto Peninsula, which is the hardest hit by this massive quake, calling out desperately for all sorts of supplies, everything from water to food to blankets, everything basically they need, basic supplies. And the fact that this plane has been lost tragically with the loss of 5 lives is also a blow to those people in evacuation centers or whose homes have been flattened in this massive earthquake, who are desperately in need of those supplies.
What are some of the difficulties that we're seeing when it comes to the broader rescue effort?
Yes, well, I mean, the good side of this earthquake, in a way, was that it hit in a relatively unpopulated area. But this Noto Peninsula, it sticks out into the Japan Sea. It's rather difficult and remote and hard to access. A lot of the roads on the peninsula have been blocked by landslides and simply buckling in the effect of the earthquake. So it's hard for rescue crews to get through and hard for people to bring those supplies in. Even the local airport was closed due to a massive crack in the runway. way. So those are some of the difficulties. And what's going on at the same time is a massive series of aftershocks. So there's been no respite for the people on the Noto Peninsula.
A really terrible situation with families spending really the New Year holidays in evacuation centers. How are these survivors coping?
Yes, I think it's been very hard for them. I mean, Japan does tend to have a good setup for these kind of evacuation centers, being a very earthquake-prone area, as we know. But yes, those centres can be very cold. They can be prone to, people who are there can be prone to obviously catching diseases from other people. You know, viruses can spread very quickly, we've found. People can suffer from things like economy class syndrome because they're stuck sitting in a small cramped area for long periods of time. So the sooner people can be got out of those and into sort of temporary housing, the better for them, I'm sure.
Bloomberg's Isabel Reynolds and Karumi Mori there in Tokyo. Well, the PBOC says it injected nearly $50 billion worth of low-cost funds into policy-oriented banks last month, suggesting that the central bank may be ramping up financing for housing and infrastructure projects to support the economy. A Greater China senior executive editor John Liu joins us from Beijing. And John, of course, markets are still kind of working its way through that televised address from President Xi Jinping vowing to support and strengthen the Chinese economy, identifying some of the weaknesses and shortfalls. This latest, I guess, policy evidence, what does that tell us potentially about the direction the policymakers might take this year?
I think policymakers are using every tool that is available to them to try and get liquidity and lending into the system. One of the big problems with the economy right now is a big drop-off in mortgage lending. People are not buying homes. We've seen that reflected in lower prices. We've also seen that in a drop in the number of loans that are going out for home purchases. And so if individuals and businesses are not borrowing, Beijing is trying to get local governments to borrow. This lending that the central bank is doing, it allows it to use its balance sheet to get money to policy banks, which then lend it to local governments to build these public housing projects and to rebuild some of the shanty towns that exist in cities across China.
John, we have seen a series of measures coming from Beijing, coming from both their fiscal and monetary policy authorities, really not doing much in order to shore up confidence in the economy. What should we be watching out for in 2024 for more indications that perhaps they really have a more aggressive push in order to support recovery?
So people I know have been waiting for the bazooka to get pulled out, and I do not think that is coming anytime soon. There is a real hesitancy on the part of Beijing to do that because of the implications that would have for the future, potentially the threat of inflation. As of now, we've seen piece by piece, even this $50 billion US from the central bank, that is part of something that Bloomberg News reported on late last year, that the government is planning $1 trillion of such lending to try and get property projects up and going again. I think we will see more of the same, a little bit here, a little bit there, but no bazooka.
What is the real risk of a deflationary, demand down cycle taking hold in China now, particularly when it comes to the confidence or lack of confidence that we're seeing across the private sector, across households?
I think the threat is very real. We've seen that in the CPI data that we've gotten the last couple of months. Again, this is the property crisis unfolding in a different way. And the reason is that the vast majority of household wealth is stored in people's homes, and the value of those homes has fallen significantly, in some places 30–40%. And those households are feeling poorer by the day, and they're not going to spend. And so they are trying to save more. That is resulting in less consumption. That is coming through the economy in terms of pressure on the deflationary side.
Bloomberg's Greater China senior executive editor John Liu there in Beijing. Some of the other stories that we're following when it comes to China today. And the country's military is emphasizing its intent to crack down on corruption this year after a series of abrupt personnel changes in 2023. The People's Liberation Army Daily mentioned corruption 3 times in its January 1st editorial, the most since President Xi Jinping began his crusade against graft in 2012. Beijing replaced its defense minister and 2 top generals last year without explanation. China is front-loading its oil import quotas for 2024. It's a move that's expected to help refiners better map out their production for the year. Data from consultancy JLC shows Beijing issued quotas for 179 million tonnes of crude. That total for 2024 is slightly below what was awarded last year. China's big state-owned refiners are not subject to import limits. The Thai Prime Minister, Srettha Thavisin, says Thailand and China have agreed on a deal to scrap visa requirements for travellers as a boost for the post-pandemic recovery in tourism. Chinese visitors will be exempt from requiring visas after the current temporary scheme ends in March. China will also grant Thai tourists the same permanent privilege. You can get that roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can find that at Daybreak Go. It's also available on the mobile in the Bloomberg Anywhere app. You can customise those settings so you just get the news on the industries and assets that matter to you. This is Bloomberg.
You're watching Daybreak Australia. Malaysian Prime Minister Anwar Ibrahim has dismissed apparent attempts to topple his government. The so-called Dubai move was an alleged meeting among Malaysian opposition leaders in the United Arab Emirates last month aimed at undermining the Prime Minister. Anwar says he was aware of the meeting, but is more focused on the country's economic development. Donald Trump has filed a lawsuit seeking to restore his name to Maine's presidential primary ballot. The state last week declared Trump ineligible for another term under the U.S. Constitution's 14th Amendment, which bars candidates who have engaged in insurrection. Colorado Republicans have already asked the Supreme Court to reverse a decision to remove Trump from that state's primary ballot.
All right, let's take a look at the state of play when it comes to the first just half hour or so of trading here in Australia. And of course, we're seeing that broader retreat from risk assets after what was really in tandem the worst drop, the worst start to the year in decades for stocks and bonds overnight. So not a great lead for Australia. And we're seeing that retreat now for the ASX. We were at the close yesterday just 5 points away from the intraday record, less than 2 points from that closing record set in August 2021. But the broader environment being so risk-off, it may not be the day that we get there just yet. We're seeing already a fall of about 1% in the early part of the session. We're also watching the Aussie dollar as well, 67.66. We did actually, in fact, despite the fact that we are seeing some gains across Asian trading pairs, the dollar actually did manage to claw back some of those gains, opening the year with the biggest advance since October, with some of these, higher global bond yields, the situation when it comes to geopolitics in the Middle East and Europe hampering some risk-taking and driving those flows into the greenback as well, Shery.
Yeah, given that we saw treasuries really falling across the board with the 10-year yield above that 390 level, not surprising that we got that jump in the dollar in today's session. And take a look right now at how the Japanese yen is trading, because we're looking at 142 being the level very early in the 2024 session, of course. But we have seen really thin trading for the Japanese yen, given that, of course, the market is closed today. Investors still sort of monitoring the conditions after that earthquake on Monday. And of course, given that December also was the best month for the Japanese yen for 2023, we continue to see speculation that monetary policy will again diverge between Japan and the US this year, but going in opposite directions. 715 is your level for the offshore yuan. This is Bloomberg.
You're watching Daybreak Asia. I'm Annabelle Drawlers with the check on markets. So we're 30 minutes into the trading session so far for Aussie stocks. And as Heidi was just mentioning earlier, we're retreating away from that record high that we nearly touched into the close yesterday. Also to note is just trading volumes, because they're about half or 50% lower than where they would typically be on a 20-day moving average basis. So perhaps a lot of traders are still away from their desks. Kiwi stocks, meanwhile, they're back online following an extended break again to the downside here. And that really sets the direction broadly significantly for equities in the region today, those markets that are trading. To note, of course, that Japan does remain shut for yet another session today. But it is that direction that came through from the Wall Street session, quite a negative or a sour start to 2024 trading. Changing on, it was really that changing perception around the extent of rate cuts that we're going to get from major central banks over the course of this year. So money markets, what we're sort of seeing priced in is around 150 basis points of cuts over the coming 12 months. That's about 7 basis points lower than where we were at the end of last week. So it does just say that perhaps a lot of investors aren't quite sure that we're going to see the magnitude of the reduction that had previously been priced in. And we actually saw Treasury yields rising overnight quite significantly, led by the front end of the curve. A similar move also coming through in the European session, translating a little bit so far into the Antipodeans so far, but something that's likely to put a bit of pressure on equities in the session. And as well, Heidi, is that story of a firmer dollar.
One of the other stories that we're following, of course, is these volumes when it comes to Tesla versus BYD. Tesla delivering more vehicles than expected, actually, in the fourth quarter, but still wasn't enough for the firm to stay ahead of China's BYD in global EV sales. For more, let's bring our Asia transport reporter, Danny Lee. And so we saw significant price cuts, right, as part of this new strategy to chase volume over the margin. Has it played out well for Tesla?
Yeah, good morning, Heidi. I think what's important is that Tesla did beat estimates. It beat estimates on deliveries, so it delivered 484,500 units in the final quarter. That's slightly more than the 483,200 that was expected as consensus. So in the early part of the year, Tesla led the way with price cuts, and actually at the end of the year, BYD followed the Tesla playbook. But what we have now seen is in the final quarter of the year, BYD has beat Tesla in EV sales for the first time ever. So it's more of a symbolic change, but clearly Tesla not doing enough to sell to stay ahead of BYD.
Danny, how sustainable is this, given that Tesla, of course, has a global play as opposed to BYD that depends very heavily on China?
Yeah, I think for BYD, they've got the low cost base in order to flex as much as it wants to go down in order to compete on price. When you look at Tesla, Tesla also is very cash rich as well. It's got and it generates a lot of profit and a lot of revenue, so it can also sustain. But as we've seen towards the back end of last year, Tesla continued to unwind some of those price cuts. But for Tesla, at least it delivered on its expectation of delivering 1.8 million units for the year, but it still falls short of what Elon Musk had actually said earlier in the year, that it could deliver maybe 2 million units. So very much a kind of a low end of the expectations that has met investors. But as we see with the shares in New York overnight, down 1.6%, as much of that down 1.6%, those shares did recover later on in trade.
Asia transport reporter Danny Lee there joining us in Hong Kong. Our next guest thinks that Tesla and BYD are traded very differently. Joining us now is Junheng Lee, founder and CEO at JL Warren Capital. Junheng, good to have you with us. First of all, what do you make of the news that really BYD overtook Tesla when it comes to quarterly EV sales?
I'm not sure if the direct comp is that meaningful. Those are very different companies. BYD is primarily China-based, and Tesla is a global company. Tesla has an investor base that are eager to own a piece of the AI story, and that they own Tesla because of the exposure of a Magnificent Seven. BYD are for investors who are chasing the recovery of the Chinese cyclical consumer names, and BYD is the leader of China EV. So those are very different companies and run on different business models and with very different investor base. So what's common though is that although Tesla is a global company, 60% of Tesla cars are made in China, so it has significant exposure to China, and 30% of shipment are delivered onshore in China, and so it's very it's correlated with the macro economy in China as well.
Junheng, how sustainable is the growth that BYD has seen, given those macroeconomic issues that you mentioned? We have competition on the mainland being pretty fierce, not to mention that the Chinese economy is slowing down. And of course, the adoption rate of EVs already in the country is pretty high.
The adoption rate is very high. It's about 35% for the year 2023, and exiting the year, it has already reached 40%. So just put everything to perspective. In California, one of the wealthiest states in the U.S. with very mild, accommodative climate, EV adoption is about 35%. So, and when we say in China, the adoption rate is 35%. In some cities, such as Hangzhou and Shanghai, adoption probably is already north of 50%. So is that going to be 80%? I don't think anytime soon. So in other words, I mean, our base case assumption is that this year the adoption will continue to go up, but probably going to be like low 40s. So that gives you about 70% growth for EV, collectively the EV industry as a whole. And then we assume that PV sales in China is likely to grow similarly this year versus last year. So it's about low single digit in line with the GDP growth. So that gives you EV sales growth in China about 20-25% growth. So, and then there's winners and losers in the market, and the competition, like you said, remains very intense. And what we see is actually the pricing war accelerated towards the end of last year. So BYD, for many of its popular models, it cut prices as much as 15%, not including some of the bonuses to buyers. Same thing with NIO buyers. Same thing with Model Y, Tesla Model Y. Buyers. So what we see is a soft environment, and the more products coming to the market, and the competition intensifies.
Tesla cut prices even more than BYD, right? So is Tesla among the losers or the winners when it comes to the Chinese market, factoring in the element of geopolitical tensions also between Washington and Beijing escalating?
I think Tesla has a very different strategy. Tesla launched the Model 3 in 2017, a Model Y in 2019, and has no new product ever since then. And it's been doing really well on just two models versus for average Chinese EV OEMs. The product cycle is very short. So they kind of launch EV product as if it's a cell phone. So the R&D and the product development cycle on average is about 1 to 1.5 years. That's very short. Yes, I mean, Tesla still grew north of 35% year over year last year. So I mean, it's in part it's in line with the overall EV market growth, but it's underperforming BYD, who adopts a completely different strategy. It's of a much lower price points, and it's more aggressive in pushing out new models.
What are the prospects of BYD being successful overseas?
Well, I think for EV main markets, there's China, US, Japan, and then it's India. I think BYD is pretty much excluded from all those markets. European countries, they are cautionary. Although there's no direct ban, but it's possible that more restrictive measures against the Chinese technology, Chinese OEMs will come out in the future. So now it comes down to maybe Russia and the Middle Eastern countries that could be more acceptive or open to Chinese automakers and the Chinese technology companies. But again, BYD is very different. BYD makes car. That's it. It's not a technology company. I mean, Tesla, it labels itself as an AI company. So Tesla's stock valuation will not be the same if it just sells car. So it's a very different dynamic in terms of investor base and the company business strategies.
Interesting. Junheng Lee, good to have you back. Founder and CEO JL Warren Capital with the global EV space. Heidi.
Let's get some of the other corporate stories that we're tracking this hour, Shery. Airbus managed to beat its annual delivery target in 2023 as a plane maker ramped up output in December. According to Aviation Flights, which tracks aircraft handovers, the firm likely delivered 733 jets to customers last year. One source also said that Airbus exceeded its goal of 720 deliveries. The company is due to reveal its official tally later this month. Fidelity estimates that social media platform X, formerly known as Twitter, of course, is now worth less than a third of the $44 billion Elon Musk paid for it back in October 2022. It's the latest in a series of markdowns by Fidelity as X struggles to hold onto advertisers and is weighed down by $13 billion in debt. Meanwhile, users say news headlines have reappeared alongside links shared on the site. It's a quiet reversal from a change that Musk himself implemented last year. Plenty more to come here on Daybreak Asia. This is Bloomberg. Hamas says Israel has killed one of its senior leaders in an explosion in Lebanon, raising fresh concerns of a regional escalation in the war in Gaza. Let's bring in Michael Heath for more. So have we heard from Israel on this? I mean, this is the first attack that we've seen in Beirut since 2006.
Yeah. Nothing has been said officially. They haven't acknowledged responsibility or claimed responsibility for it. There are reports off the record of US and Israeli officials confirming that it was an Israeli attack, and it does ratchet up pressure. There's no doubt about that. Lebanon is obviously very, very unstable, very volatile place. Hezbollah, which is backed by Iran, is on Israel's northern border. There's been skirmishes going on between Israel, low-level skirmishes between Israel and Hezbollah is much better armed than Hamas is as well. So there's real potential here that this could escalate if Hezbollah decides to take it upon itself to seek revenge. The other issue too is there's been tentative efforts to try to restart hostage talks on the release of hostages, and one of the worries now is that this will completely knock that off the agenda because Hamas is not going to be wanting to engage with Israel because of this assassination. That said, Israel had warned that it would track down anyone who was senior members of Hamas and people involved with the attack or senior people from the organisation, and Israel has a record of doing this. Obviously, you saw after World War II, former senior Nazis would have these unexpected accidents in France and places like that. Following the Munich attacks at the Olympics, Israel went out of its way to assassinate everybody who was involved in that. So it does have a history of doing this. What the repercussions are, we'll just have to wait and see, but it could significantly escalate tensions, definitely.
Have we heard of a reaction from Iran yet?
Not at this stage, not that I've seen, but I suspect that we're I mean, whether Iran would speak about something as individual as this, but I think whether actions might speak louder than words here.
We were talking yesterday about a strategic, I don't know if you can call it a de-escalation, but the sort of approach of more of a targeted strategy in Gaza, right? But at the same time, we're also now seeing reports that essentially the entire population has been removed from their homes, and it remains a state of complete chaos there. Are there any prospects of that sort of de-escalation taking place as we get into this new year?
Well, it's really difficult to see how it works, Heidi, because basically people's homes are uninhabitable, and it's not just disease people are talking about now with these displaced people, it's famine that's being spoken about. They can't get enough food in to feed these people, and then you've had these these reports. It's a very, very right-wing Israeli cabinet. You've had people like the finance minister talking about how the Gazans should all emigrate from their area, which actually elicited a response from the State Department, which is very unusual, where they named the finance minister, said it was were quite critical of his remarks and that this is not policy, and they've been reassured it's not Israeli government policy. But what will happen with those people is a real issue, and even if you go down to more targeted attacks, it's still a war zone, and so the chances of Israel allowing people to move freely when Hamas can then move among them, it's really hard to see how that would work.
Bloomberg's Michael Heath here in Sydney with the latest, Shery.
All right, Heidi, we turn to the latest on an ongoing scandal at Harvard. President Claudine Gay is stepping down, ending a tenure marred by allegations of plagiarism and a campus controversy over anti-Semitism. Bloomberg's Vonnie Quinn joins us here with the latest, and Vonnie, Gay actually had the support from school officials up until last month.
In fact, up until this weekend, it would seem, Shery, it seems to be these fresh allegations of plagiarism that were really the tipping point. Of course, this has been brewing for a couple of months, obviously, since those attacks on October 7th on the Israeli population. However, congressional hearings were the first sort of stone hurled by many non-free speechers to suggest that perhaps some of the presidents of some of these major universities should step down if they weren't going to unilaterally condemn any kind of language about genocide against Jews as a violation of university policy, which they didn't, in fairness, at these congressional hearings. They sidestepped and they left very many people sort of bewildered about their answers. At the same time, they would say they're, university curators and that it wasn't their place to step in on any of these kind of debates. But Claudine Gay, first Harvard black president, she had been in her role since July, and the board was very happy with her performance until very, very recently. In fact, as recently as December 12th, the Harvard Corporation, Penny Pritzker is leading it, said that it examined her work also as a political scientist and found, quote, a few instances of inadequate citation, but no violation of Harvard's research standards. Now, this worsened later on in December when Harvard found two more examples of what it called duplicative language without appropriate attribution. Now, this wouldn't be okay for a Harvard student, and so the call went up, why is it okay for the Harvard president? I will note that she stays on at the faculty. She's a very respected political scientist, and the likes of Larry Summers, who had been very critical, has come out and said kudos to her for suggesting that the focus should be on the institution now and not on the individual, because that's what she said in her statement. She said, it has been distressing to have doubt cast on my commitments to confronting hate and to upholding scholarly rigor, but that she wanted the focus to be on the institution.
How much donor revolt is Harvard dealing with now?
Well, it's all relative, right? So several multi-billionaire donors have come out and suggested that they're pausing or stopping their donations. Len Blavatnik has been the most recent one. He donates at least $200 million along with his family to the medical school and other donations as well. There's also, of course, Les Wexner, who is known for his Victoria's Secrets founding and also for having Jeffrey Epstein have his money managed for him for a long, long time. And also Israeli shipping magnate Ilan Ofer. They've all paused or been pulling their support. Also less wealthy alumni, and there have been criticisms from people like Mitt Romney, also an alumnus, as well as, of course, Seth Klarman and Bill Ackman, hedge funders. And we don't know whether they've pulled their funding or not, but essentially it is a trickle. I mean, Harvard's endowment is more than $50 billion, and while it absolutely helps, it would have to gain a lot of steam before this would really put a dent in Harvard's ability to operate in any kind of way, Shery.
Bloomberg's Vonnie Quinn here with the latest on that ongoing controversy. We have more to come on Daybreak Asia. This is Bloomberg. Welcome back. The CEO of genealogy research provider Ancestry says the explosive growth in AI is not a threat to the rest of the technology space. Deborah Liu told David Rubenstein how generative AI is changing her business.
Well, I think that one thing we talk about when we talk about technology is we have this kind of monolithic idea of what it is, but actually technology is changing different industries at different paces in so many different ways. And if you think about the things, what was technology like 20 years ago before the iPhone, for example, and where it is today, the ability to have, answers in your pocket. Gen AI is going to make it easier to access more information faster. How do we think about all those things, and where is that going to go beyond this? I actually am very bullish on technology because technology is an underpinning. It's not its own industry. It is a part of every industry, and it's actually going to increase productivity and actually make our lives better.
I see. So do you think technology is still going to be centered in the United States largely around the Silicon Valley area, or is it going to change?
I think that what's amazing about what technology has done over the last 20 years also is that, now you can start an app anywhere in the world. You can live anywhere. You can have, AWS, and you can set up and not have to have a system administrator or a server server that you have to build. Now it's made it so much easier with these tools to actually look at a problem that you have and solve it anywhere. And so I actually think that distributes the ability for us to bring technology together any place.
So artificial intelligence, AI, has changed the world, and it's changing the world dramatically, people believe. What is AI going to be able to do for you or not do for you?
Well, I think one of the most incredible things about AI is Gen AI is coming and it's changing the way we're doing things. But what you have to remember is so much of what we do every day actually is already involving AI. I'll give you an example. So last year, the 1950 census came, and you have millions of pages of these records that are handwritten, just people going door to door and writing it down. And we had done the 1940 census 10 years before that. It took us 9 months to digitize it, people typing things, indexing it manually. This time in 1950, so last year, it took us 9 days to do the same thing. And it's because we had built AI around handwriting recognition, and it allowed us to accelerate so much of the work. That's why we can go from 40 billion records to another 15 billion in just 1 year, because of the technology that we have built over the years. Gen AI is the type of AI that's coming that's really helping people to discover things in a different way. So AI is a very vast field, and Gen AI is one subset of that. Gen AI is really helping to understand storytelling. So for example, my parents immigrated in the 60s. What was it like, and why were Asian Americans coming in such large rates in the 1960s? A lot of that has to do with such a history around, the Chinese Exclusion Act and those types of things. And with Gen AI in line, we can actually answer that question. We can answer questions of, the experience your grandparents might have had with the Spanish flu in Chicago, these types of things. And we think that that's going to engage people to really learn more about how their parents came to America, how their grandparents live through various world events, and it's going to be really powerful for people.
And you can catch more of that conversation on the David Rubenstein Show, peer-to-peer conversations coming up at 7 p.m. Thursday night if you're watching in Hong Kong. All right, take a look at how markets are trading at the moment, and it does not look like the day when it comes to potentially that record high being matched on the ASX. We're seeing decidedly a risk off. Asian stocks looking like it will continue to see that dip as we get into the start of trading in other major markets across to Asia. We have seen the ASX really opening lower today. The Seoul Open is next.
This is Daybreak Asia. We're counting down to Asia's major market opens. After a not-so-happy start to the new year for Wall Street, we have the S&P 500 falling. The Nasdaq 100 also seeing its worst day since October. Bonds were also down. We saw the 10-year yield shoot up above 390, Heidi, given that, of course, we are really trimming some of those bets for rate cuts this year.
Yeah, really in tandem, stocks and bonds setting the year off to the worst start that we've seen in decades for these markets. Surely things can only get better, right? Those are famous last words. But certainly doesn't look like, Belle, that today will be the day that we'll see that record high being matched for the ASX.
Yeah, that's right. We had a bit of expectation coming into the session. Futures came online. We saw that drop of 1%, and it told us, today is not the day that we do see for benchmarks here, reaching what are some multi-month highs across the board, if not all-time highs. But in Korea, for instance, we've got the Kospi trading around a 19-month high, but seeing live pricing, we'll wait for that to start trading here. But broadly, the expectation for the session today is going to be weakness coming through across the board. And the factors that really drive that, yes, as you mentioned, Heidi, it was, or Shery as well, the stocks and bonds on Wall Street seeing their worst start to the year in decades. You had that firmer dollar as well, because remember, it was one of the best days we've seen for the greenback since March of last year. And that rethink really coming through around the expectations for just how aggressive Fed rate cuts are going to be over the course of this year. That really played into the dynamic as well, because traders now perhaps thinking that central banks won't really have that need to cut quite as quickly as had been previously priced in. So you've got that reaction coming through so far. The Kospi already down more than 1%. Pressure coming through onto the Kosdaq as well. And that Korean won, a little bit of catch-up move here, given it doesn't trade as in such a large range as other currencies here, but you are seeing that weakness building against the greenback so far this morning, earlier down 1.5% as we came online, but certainly one of the currencies to watch throughout the session. So that's the state of play for Korea. Let's change on, take a look at how we're faring for Aussie stocks 1 hour into the session. As you said, Heidi, it was that story. Perhaps we would see the ASX 200 reaching an all-time high in the session. We're retreating away from that mark so far. And it is that same trading dynamic coming through. Slightly higher yields. You've got the moves that are coming through in the currency here, fairly steady, but it was that dollar strength story. And then oil as well to note, given we have seen Brent crude WTI really reacting to those troubles in the Red Sea. Iron ore miners, we are seeing them a little bit under pressure so far, but something that does bode pretty well for the outlook is Citibank saying that they're bullish on Aussie iron ore miners over the first half of this year. And it's really about that demand story from China, Shery, even though, again, something else that's negative for the outlook today, just that start we had for Chinese stocks on Tuesday for this year's trading, and it's that economic story that's really weighing there.
Well, let's bring in our next guest, who says the narrative of a soft landing in the U.S. will be the key driving factor for markets this year. He also remains overweight on Japanese equities. With us now is Daniel Lam, Head of Equity Strategy at Standard Chartered Wealth Management. Daniel, good to have you with us. Happy New Year to you. You talk about being overweight in Japanese equities, but actually neutral when it comes to Asia ex-Japan. Bell was just talking about how bad it's been for Chinese equities. Is a China factor a problem here?
Well, we need to wait for a catalyst for the Chinese equities to perform. But having said that, if you've seen the big moves in December in Hong Kong China equities towards the end of the year, big down moves, they've been met with very decent buying and recovery after that. So there seems to be a change of hands in the ownership of the Hong Kong China equities coming from the maybe the foreign institutional money, which there's still outflow in Hong Kong China equities into the local hands. But having said that, you do need a catalyst for that to perform. And that catalyst may come from added fiscal boost from the government, but we've yet to see that still.
Everything that has been said so far, whether it's those trickle-down measures, which is fiscal measures, a little bit of monetary policy here and there, that's not really enough to bring back the confidence. What will it take for that confidence to be sustainable for Chinese assets in 2024?
Well, they need to show a more consistent and more frequent type of stimulus in the Chinese economy, right? Such that data can turn for at least a few months for people to be getting back en masse, right? Right now is relatively sporadic, and maybe the stimulus level is not strong enough yet. So that needs to turn in 2024 in order for that to perform. But they are cheap, of course, in the valuation, so therefore the downside is limited. But for the upside to come, we do need those to happen.
Does the valuation picture still make sense for Japanese equities? I mean, we have seen a little bit of pressure towards the end of 2023, but we had a substantive rally early in the year.
Yes, so the valuation has gotten more expensive, relative to the beginning of 2023, of course, in Japan equities. So right now, the gains is becoming a little bit more incremental. Right? So the risk factor there is obviously the dollar yen, where the yen may get stronger on the back of tighter monetary policy from the BOJ, which is likely this year. So you have to be a bit more selective when you go for Japan equities. You have to be in the sectors where they may benefit from the higher yields that you may see in Japan. So for example, the financials would be a sector that we'll be looking at.
You say that the U.S. soft landing will be the key driver for the narrative in 2024. How does that affect U.S. assets in comparison to also Japanese assets? Because what's going to be interesting this year is that we will continue to be talking about policy divergence, but both central banks are going in the opposite direction than they did in the last few years.
Well, again, a sector call, right? Because if the U.S. were to have a soft landing, and that's actually our base case scenario for this year, then the Fed may start to cut rates this year. Now, I know that the U.S. 10-year yield has gone up in the first trading day of the year, but that's in reaction to a big drop that we've seen, right? It's gone from, nearly 5% to the 3.8% level, and now it's 3.9. But the trend of the U.S. 10-year yield remains that it is seeing a lower highs and lower lows, okay, as opposed to most of 2022 and 2023, where it is hitting higher and higher highs, right? And the narrative there is because of this soft landing and the potential rate cut from the Fed. So right now, we're seeing that the U.S. 10-year yield faces some resistance at 4.3, okay? So maybe there's further rebound there, but the rebound would be buying opportunities for the growth sectors in the U.S., right? So in the U.S., you want to go for the growth sectors. In Japan, you want to go for those that can benefit from a tighter and higher yields, tighter monetary policy and a higher yields. So the financials, for example.
That's an interesting call. So what about the rest of the Asian markets? We're talking about South Korea. We're talking about potentially Southeast Asia. In 2024, what will be the key drivers and perhaps your best calls when it comes to some favorable opportunities?
Well, in South Korea, it would really be focused on the earnings recovery and especially on the semiconductor stocks. Right? So for South Korea, we do see quite strong earnings growth this year, and likely that the semiconductor stocks can do pretty well as well because of the inventory cycle in the semiconductor space. So that's for Korea. In India, we do continue to see the domestic story playing out there, especially the fact that the long-term favorable demographics in India is likely to be the key driver. Remember that, roughly 70% of the Indian population is in the working bracket, and that's very powerful compared to many other regions or other countries. So that will be the market that one can be watching out for as well.
Daniel Lam, good to have you with us, Head of Equity Strategy at Standard Chartered Wealth Management, with his calls for 2024. Let's turn to Bell for some of the big movers because you're watching those tech stocks in South Korea.
Yeah, just picking up on some of those themes there. But what's interesting is actually we're seeing tech stocks in Korea leading the drop today for the Kospi overall. And these are some of the big movers so far in the session behind me on the board. It is that story or that follow-on from what happened on Wall Street overnight. So the NASDAQ, for instance, saw its biggest drop in 2 months. And it was that focus on the Magnificent Seven, or the so-called Magnificent Seven, that led so much of the gains over 2023, because we saw Apple, for instance, falling on that Barclays downgrade, warning that iPhone demand is cooling. You saw Nvidia, Meta platforms as well, all of those sinking. At the same time, we also had that move in Treasury yields as well, because we had that move higher in yields led by the front end of the curve, with traders repricing or rethinking their expectations around Fed rate cuts and a firmer dollar off the back. So they're negatives for tech stocks overall. So that's a session so far. Let's change on. Just take a quick look at the Aussie IT stocks, because they're also leading the drop so far for what we're seeing in Australian trading here today. That broader benchmark for the IT index down 1.7%. Again, it's those same themes that we're discussing so far. The changing expectations, or continually changing expectations around the Fed. Haidi, of course, a big trading theme that's just continuing across from last year into this year as well.
Well, still ahead, Japan is reeling from its second disaster in 2 days, a fiery airport collision involving a passenger jet and an earthquake relief flight. We'll bring you the latest from Tokyo next. This is Bloomberg. The PBOC says it injected nearly $50 billion worth of low-cost funds into policy-oriented banks last month. That suggests that the central bank may be ramping up financing for housing and infrastructure projects to support the economy. Our Greater China Senior Executive Editor John Liu joins us now from Beijing. So is this any kind of further evidence in terms of the length that policymakers will go to this year to, as President Xi suggested, support and strengthen the economy?
I think this underscores how much effort is going into reviving the economy. This PSL, this lending facility, has not been used very often. It was used when there was an economic downturn in the last decade. It's a bit of a controversial tool because some people do describe it as sort of a Chinese form of helicopter money or quantitative easing. It is the central bank using its balance sheet to pump liquidity to policy banks, and then policy banks lend that money to local governments who use it to build public housing, to renovate shanty towns all across China. And it is getting lending going again. If individuals and companies are not borrowing, it is getting local governments to borrow.
So, John, how is the Chinese economy doing right now? Because the latest factory data, housing data didn't seem that great.
Well, I think someone said just a minute ago, it's a new year, but lots of old problems. The real estate sector is no better, and that is rippling through the economy. It's causing a confidence issue. People are not spending. People are looking for ways to save money. Household wealth, everybody feels poor because their homes are worth 20, 30, 40% less than they used to be. And the economy is not going because of that, and the government is having a real tough time trying to change that perception in terms of confidence.
John, on the theme of, New Year, same old problems, it seems like some of the problems of the last decade are still front of mind, right? Are we seeing perhaps signs of a renewed commitment in the fight against graft and corruption?
As the Chinese government likes to describe it, the corruption fight is never ending. That's what we've seen. We've had probably upwards of 1 million officials arrested over the last 10 years because of corruption charges. We've seen it through the financial system. A former senior official at the central bank was recently jailed for, I believe, 16 years for corruption. We're now seeing it ripple through the People's Liberation Army. We've had a number of generals, officials, officers, and other executives in the military complex, companies that make weapons for the PLA, all being taken down. And so it seems like there is no end in sight when it comes to fighting corruption here in China.
Bloomberg's Greater China Senior Executive Editor John Liu there in Beijing. And to that point, we're now hearing reporting from Reuters that Beijing has removed a top official who oversaw China's gaming industry, really adding to these suggestions that the government is trying to tamp down on this backlash against new harsh regulations. We saw that $80 billion rout across major tech stocks, and just building on what John was mentioning earlier about some of the other high-profile personnel changes that we've had across 2023. Some of the other stories that we're following when it comes to China, the country is front-loading its oil import quotas for 2024. It's a move that's expected to help refiners better map out their production for the year. Data from consultancy JLC showing that Beijing issued quotas for 179 million tonnes of crude. The total for 2024 is slightly below what was awarded last year. China's big state-owned refiners are not subject to import limits. The Thai Prime Minister Srettha Thavisin says that Thailand and China have agreed on a deal to scrap visa requirements for travellers as a boost for the post-pandemic recovery in tourism. Chinese visitors will be exempt from requiring visas after the current temporary scheme ends in March. China will also grant Thai tourists the same permanent privilege.
Then we turn to Japan. Crash investigators are searching for answers after the country's second tragedy in 2 days. A runway collision between two planes in Tokyo killed 5 people who were setting out on a relief mission to the country's earthquake zone. Joining us now from Tokyo is Bloomberg's Kurumi Mori and Erika Yokoyama. Kurumi, let me start with you because you're at Haneda Airport right now where the crash happened. What went wrong?
Yeah, in Japan, just a tragedy over another tragedy. What happened yesterday here was around at 6 p.m. local time. A Japan Airlines flight, JL 516, was cleared to land, according to officials. At the same time, a Coast Guard plane that was set to go to evacuation efforts and help with the disaster-struck area in Niigata and the surrounding area collided with the Japan Airlines flight. It may be tough to see behind me, but there is a bit of a black. Maybe on screen it's a bit tough, but that is what remains of the Japan Airlines flight. We're right now on the 5th floor, the sky deck. We got access to this area to shoot this, but it's just stunning to see in person, just absolutely devastating. We do see still a fire truck hanging around, but there is really little to see in terms of what's left of the plane. There were about 100 fire trucks deployed here with the DMAT team as well, and it took at least 5 hours of crews to try and extinguish the flames.
We've had aviation analysts suggest that human error, be it from the Coast Guard, the airline, the controllers, we just don't know. But I do wonder what the steps are from here to try and determine what happened.
Right. Well, the investigations are still ongoing, and the officials, government officials, have repeatedly said that to us. Still, we have learned that the Japan Airlines flight was cleared to land onto this runway behind me, and the Coast Guard airplane was set to depart, and it was cleared to go up to a certain point on the runway. There's no clarity exactly where it was cleared to land or cleared to proceed, but there was some communication, potentially error, human error. The officials are looking into it right now, so it may have to do with air traffic control.
Right, Erica, we know that that Coast Guard plane was actually headed for relief work at the earthquake-hit region. How is the rescue effort going on right now?
Right. So death toll rose to 57 according to local broadcaster NHK, and unfortunately, number is not going to be the final one, as the rescue work still underway extensively after 2 days after the disaster happened. The weather there today is harsh at below 10 degrees Celsius, and expecting some rains, heavy rains. Still about 34,000 households are without power, and many people have no access to water as well. And over 30,000 people are at evacuation centers, with quite a few people being elderly, while aftershocks are continuously hitting the region, making people at the center feel insecure. And local broadcasters showing people asking for supplies and highlighting the need and how serious the situation is.
You've talked about the sad reality that death toll is likely to rise. What are we seeing in terms of the recovery efforts and successful recovery and rescue?
The situation has been quite difficult, but I can actually see some slow and gradual recovery. For instance, in transportation, Shinkansen, the bullet train services resumed yesterday fully, while it'll probably take some time for many local lines, which is a key transportation measures for local residents, to fully recover their services. And the main point is still we don't know the exact damages that the earthquakes caused, especially for companies. And the area hit by earthquakes aren't actually industrial centers, but some major companies have their production site there, including Toshiba's chip factories or Murata Manufacturing's production sites. And spokespeople told us earlier that they're still assessing the situation closely. And there are a lot of small and middle-sized enterprises there which support the local economy, which is going to be a key for the recovery to the region.
We know that the government has set a task force up in order to help here with the rescue operations. Tell us a little bit more about what the administration of Prime Minister Fumio Kishida is doing right now.
Prime Minister Fumio Kishida and other ministers are trying to respond to the situation as quick as possible, updating the information every few hours. But this seems to be a really challenging task. One of the most challenging things that they have faced so far. Normally, Kishida holds a series of greeting and speeches as the new year starts, but they already cancelled most of them to focus the rescue work. Now, Japan Airlines incidents also added their emergent tasks. Government officials are even busier in addressing the situation. They haven't appeared on TV and camera today, so we will know more as the days goes on.
Bloomberg's Ariko Yokoyama and Kurumi Mori there in Tokyo. And you can get the latest on that story and the roundup of all the other stories you need to know to get your day going in today's edition of Daybreak. Bloomberg subscribers can get that at Daybreak Go on your terminals. It's also available on the mobile in the Bloomberg Anywhere app. And of course, you can always customize those settings so you just get the news on the industries and assets that you care about. This is Bloomberg.
You're watching Daybreak Asia. Here are some of the top stories that we're following today. Hamas says Israel killed a senior militant leader in the Lebanese capital. Saleh al-Aruri was known as the mastermind behind its armed wing in the West Bank. Lebanese media said an Israeli drone struck an apartment building in Beirut, killing 6, including al-Aruri. Tel Aviv has not confirmed it was behind the attack, but it's raised fresh concerns of a regional escalation of the Gaza war. Malaysian Prime Minister Anwar Ibrahim has dismissed apparent attempts to topple his government. The so-called Dubai move was an alleged meeting among Malaysian opposition leaders in the United Arab Emirates last month aimed at undermining the Prime Minister. Anwar says he was aware of the meeting but is more focused on the country's economic development. Donald Trump has filed a lawsuit seeking to restore his name to Maine's presidential primary ballot. The state last week declared Trump ineligible for another term under the U.S. Constitution's 14th Amendment, which bars candidates who've engaged in insurrection. Colorado Republicans have already asked the Supreme Court to reverse a decision to remove Trump from that state's primary ballot. Take a look at how European futures are coming online in the Asian session. We're seeing some downside and pressure after European equities fell on the first trading day of 2024. We saw bonds retreating, value stocks outperforming, although really it was consumer products and technology stocks that lagged in the regular session. We're seeing a similar picture here in Asia as Asian stocks are under pressure at the moment. We have more to come on Daybreak Asia. This is Bloomberg.
This is Daybreak Asia. I'm Annabelle Drulers with a check on markets. We're half an hour into the trading session so far for the Kospi, and you can see here actually it is leading Asian stocks lower so far in the session today. Japan, of course, is closed, but we're seeing it down at 1.25%. The dynamics that are really feeding into this, it follows across from the Wall Street session because quite negative news for bonds and stocks overnight. The worst start to the year that we've seen in decades for both of those asset classes in tandem. But driving that is these changing expectations around how aggressively we can expect the Fed and other G10 central banks to cut over the course of this year. So that led to higher Treasury yields that came through. You can see the Aussie 3-year yield advancing somewhat in the session, and likewise also a firmer dollar off the back of that. The best day that we saw for the greenback since March of last year. And again, you're seeing that weakness feeding through into the Korean won, trading back near that 1300 mark. Hong Kong futures, they are pointing to a weaker open in the next hour, down 1% at this stage, but it is, again, though, that perception around central banks and what they're going to do over the course of next year that's playing out in energy markets. Because if you bring up this terminal chart, you can see here that those Red Sea disruptions and the impact that had on in terms of pricing has really started to peter out, and you're seeing oil really retreating back from those highs that were set after the Israel-Hamas war broke out in October of last year. And so Brent crude, WTI, both of those are really retreating in the session, holding on to some of those losses yesterday, Heidi.
Let's take a look at the outlook when it comes to energy markets. Now, Neil Beveridge is with us, senior oil analyst at Sanford C. Bernstein. And Neil, obviously we go into 2024 with a lot of uncertainties in terms of the further work that OPEC has to do in terms of, any kind of potential recovery in China and whether a soft landing scenario plays out for the rest of the world as well. Maybe give us just your top view as we head into this new year as to how supply and demand is going to look like.
Yeah, I think when you look at supply and demand, 2024 is going to be different to last year in that we're going to see both slower demand growth and slower supply growth. So on demand, we saw really exceptional demand growth in 2023. That was largely driven by 1.5 million barrels a day increase in demand from China as we saw the COVID recovery play out. This year, I think it's going to be very different. I think weaker economic growth is going to lead to a significant reduction in Chinese oil demand growth. And globally, we're looking at about 1 million barrels a day of demand growth, so almost half of what we saw in 2023. When we look at supply growth, I think that we're also going to see weaker supply coming through after what was stronger expected growth in 2023. But I think when you look at the balance between supply and demand, markets look fairly balanced coming into the year, so it leaves OPEC with quite a lot of work to do to support prices at current levels.
There's also a lot of geopolitical risk as well, right? The ongoing developments in the Red Sea is just kind of the latest. Is that going to be, I guess, the extra layer of risk for this year?
I think it's going to be a layer of risk, but I don't think the events in the Red Sea are going to be that significant. I mean, we're still seeing 4 million barrels a day of crude flows through the Gulf of Suez. And while it can certainly it's added shipping time, you look at Maersk, BP, they've suspended flows through the Red Sea. It's really just adding time and cost. It's not really any disruption to physical supply in the market. So geopolitics certainly always a risk. And if events in the Middle East continue to escalate, then of course, there could be risks down the line of supply disruption. But there's nothing really, materially disrupting supply at the moment. I don't think events in the Red Sea are going to play out in a very significant way for oil.
How much of a surprise to the upside will supply be from non-OPEC sources this year, do you think?
Well, I think last year, the big surprises on supply were really how well Russia held up. I think there was a lot of expectations that we'd see Russian supply coming off, 500,000 barrels a day. That largely didn't play out. Supply was relatively flat from Russia. And, we saw stronger than expected supply coming out of the US and other non-OPEC producers. I think as we go into, this year, again, I think, you're going to see non-OPEC supply hold up probably better than expected given the capex cuts that have played out throughout the industry. So we're looking at non-OPEC supply growing around 1.2, 1.3 million barrels a day, which is a little bit higher than what we're seeing in terms of demand growth, which is why these OPEC cuts that we saw at the end of last year really need to remain in place for probably longer than just the first quarter this year.
It was a boom in spending, in particular when it comes to private shale drillers, right? Do you see that picture changing in this year? And what's the sort of broader picture when it comes to US shale?
I think if you see prices come down, then I think that will put some restraint in terms of capex for US drillers. But I think the surprise with the US is we saw 1 million barrels of supply growth coming out of the US last year. This year we're expecting US supply to be about 0.5, 0.6 million barrels a day. But again, I think the key lesson over the last kind of 12, 18 months is really just how resilient shale has been. I think with the CapEx cuts that we've seen in the industry, with CapEx off 30-40% from peak levels, I think a lot of people expected supply growth to be significantly weaker than it has been. And I think the lesson that we're seeing in the market is that shale has actually proved to be surprisingly resilient despite lower levels of spending. That does suggest there is further productivity gains that are being made within the industry.
We saw some really outperformance when it comes to Asian oil equities, right? Who do you see as, where there's potential for further upside to be captured this year, and where do you see kind of, I guess, more of a muted scenario for valuations?
Yeah, I think last year oil equities in some ways were a shelter for this from the storm, particularly in Asia. So as we saw, really a downturn in sentiment towards equities in China in particular, investors were looking at companies that had very strong free cash flow yields, strong dividend yields. If you look at the Chinese oils in particular, you're getting 15-20% free cash flow yields, 10 to 15% dividend yields. And for a lot of investors, that was really, a shelter from the broader storm that played out in equity markets. So I think as we go into this year, I think some of that will continue. I think it's going to remain pretty tough on equity markets. I think there's going to be a bias towards value stocks. And although I think crude prices are likely to remain, at or around $80 a barrel, which means limited earnings growth, these stocks are still going to offer, pretty good yields. So stocks like CNOOC, PetroChina will be offering 10, 12% dividend yields. And so I think, there's upside there. I think, if you look at, where we could see more downside, certainly in some of the refiners, we're on this weaker demand outlook. I think there could be more pressure there.
Yeah, so you like CNOOC and PetroChina, as well as some of the Australian names, and I might ask you about those in a bit, but you are more selective when it comes to Sinopec and PetroChina.
Yeah, no, I would say for PetroChina.
Yeah,
exactly. I think Sinopec is going to see slower demand growth in China, so that that significant downshift in demand in China, coupled with a very weak petrochemicals market in China. I think in Japan on Inpex, I think the issue there is that this is a stock that's been generating very strong free cash flow, but the next wave of developments is starting to come with the Abadi development in Indonesia, and over the next few years, we think that's going to be a significant call on CapEx, reducing free cash flow yield of the company.
With Sat and Santos, is that on expectation that the merger could go through?
I think the merger is more likely to go through than not. I still think there will be some regulatory issues, particularly given the dominant position of Woodside and Santos when it comes to West Coast, gas in Australia. But I think, on balance, I think it's more likely than not to go through. It will create one of the largest, LNG companies in the world. I think it's going to be a national, certainly champion for Australia when it comes to LNG. And I think the scale of the LNG portfolio will give the combined entity additional opportunities around trading, which it doesn't currently have. So I think the merger follows on this broad consolidation that we're seeing within the oil industry. I expect it to go through, and I think generally I think it'll be positive for both sets of shareholders.
Neil, always great to have you with us, and a very happy new year. Great to have those insights from Neil Beveridge, Senior Oil Analyst at Sanford C. Bernstein there. Plenty more to come here on Daybreak Asia. This is Bloomberg.
Welcome back. We're seeing broad risk off across markets in Asia. Japan is away on holiday, so we're looking at the MSCI Asia ex-Japan, and you can see it's down about 0.5%, being led lower by materials and industrials. The transportation sector within industrials also under pressure at the moment. Let's actually talk about one car company, Tesla, delivering more vehicles than expected in the fourth quarter. Still not enough to stay ahead of China's BYD in global EV sales. for a moment, let's bring in Bloomberg's Asia transport reporter, Danny Lee. Danny, good to have you back. So what can you tell us about Tesla's delivery numbers?
Yeah, Tesla beat on consensus. It beat on the fourth quarter consensus, and it also beat on the full year. So it delivered 484,500. That's slightly better than the 483,200 expected by the street. And across the whole, it delivered over 1.8 million units this year to customers. So that's a real plus point for investors. But Elon Musk had actually said earlier in 2023 that he believed Tesla could deliver up to 2 million EVs. And of course, it's only reached around 1.8 million. So it's still on the low end of beating expectations. But throughout the year, Tesla tried to stoke demand with price cuts. But unfortunately, that has not delivered the gains that it would have expected to see. And especially in the fourth quarter, what we have seen symbolically is BYD overtaking Tesla in EV sales, pure EV sales, for the first time ever. And that is just sums up a change that we have been seeing coming over time with China's best-selling EV maker, automaker, coming to the number one spot.
It's quite interesting because we know, if you've covered BYD and the China markets and all the way back to, Warren Buffett's bringing it into the global spotlight, we know that BYD's been around for a long time, and it's not just the Chinese market that it dominates, but a number of other emerging markets either, right? As well, I should say. So in terms of what next for BYD, are there other markets that, may be in danger for Tesla of being overtaken?
Yeah, that is such a great question. What we see right now is, over the past 2 years, BYD has expanded to 60 countries and territories so far. It's already leading in Brazil, Thailand, and Israel. And they are already garnering about 10% of their overall sales from export markets. But exports will be a huge focus this year in particular, especially as sales of EVs in its core market of China coming under increased pressure from more competition domestically. So for someone like BYD, it will be chasing aggressively, particularly with its more affordable EVs overall, and therefore putting potentially a challenge on Tesla in future even more.
Bloomberg's Asia transport reporter Danny Lee here with the latest. Let's take a look at some of the other corporate stories that we're tracking this hour. And Airbus managed to beat its annual delivery target in 2023 as the plane maker ramped up output in December. According to Aviation Flights, which tracks aircraft handovers, the firm likely delivered 733 jets to customers last year. One source also said that Airbus did exceed the goal of 720 deliveries. The company is due to reveal the official tally later this month. Fidelity estimates that the social media platform X, of course formerly known as Twitter, is now worth less than a third of the $44 billion Elon Musk paid for it back in October 2022. It's the latest in a series of markdowns by Fidelity as X struggles to hold on to advertisers and is weighed down by $13 billion in debt. Meanwhile, users say news headlines have reappeared alongside links shared on X. It's a quiet reversal from a change that Musk himself implemented last year. Well, the CEO of genealogy research provider Ancestry says the explosive growth in AI is not a threat to the rest of the tech space. Deborah Liu told David Rubenstein how generative AI is changing her business.
Well, I think that one thing we talk about when we talk about technology is we have this kind of monolithic idea of what it is, but actually technology is changing different industries at different paces in so many different ways. And if you think about the things, what was technology like 20 years ago before the iPhone, for example, and where it is today, the ability to have, answers in your pocket. Gen AI is going to make it easier to access more information faster. How do we think about all those things, and where is that going to go beyond this? I actually am very bullish on technology because technology is an underpinning. It's not its own industry. It is a part of every industry, and it's actually going to increase productivity and actually make our lives better.
I see. So do you think technology is still going to be centered in the United States largely around the Silicon Valley area, or is it going to change?
I think that what's amazing about what technology has done over the last 20 years also is that, now you can start an app anywhere in the world. You can live anywhere. You can have, AWS, and you can set up and not have to have a system administrator or a server that you have to build. Now it's made it so much easier with these tools to actually look at a problem that you have and solve it anywhere. And so I actually think that distributes the ability for us to bring technology together any place.
So artificial intelligence, AI, has changed the world, and it's changing the world dramatically, people believe. What is AI going to be able to do for you or not do for you?
Well, I think one of the most incredible things about AI is Gen AI is coming and it's changing the way we're doing things. But what you have to remember is so much of what we do every day actually is already involving AI. I'll give you an example. So last year, the 1950 census came, and you have millions of pages of these records that are handwritten, just people going door to door and writing it down. And we had done the 1940 census 10 years before that. It took us 9 months to digitize it, people typing things, indexing it manually. This time in 1950, so last year, it took us 9 days to do the same thing. And it's because we had built AI around handwriting recognition, and it allowed us to accelerate so much of the work. That's why we can go from 40 billion records to another 15 billion in just 1 year, because of the technology that we have built over the years. Gen AI is the type of AI that's coming that's really helping people to discover things in a different way. So AI is a very vast field, and Gen AI is one subset of that. Gen AI is really helping to understand storytelling. So for example, my parents immigrated in the 60s. What was it like, and why were Asian Americans coming in such large rates in the 1960s? A lot of that has to do with such a history around, the Chinese Exclusion Act and those types of things. And with Gen AI in line, we can actually answer that question. We can answer questions of, the experience your grandparents might have had with the Spanish flu in Chicago, these types of things. And we think that that's going to engage people to really learn more about how their parents came to America, how their grandparents lived through various world events, and it's going to be really powerful for people.
And you can see more of that conversation on the David Rubenstein Show, peer-to-peer conversations, coming up at 7 p.m. Thursday night in Hong Kong. We have more to come on Daybreak Asia. This is Bloomberg.
Take a look at how we're tracking when it comes to currencies on what is generally a risk-off day, and as such we did see a pretty significant gain when it comes to the dollar, just reversing some of the losses that we saw going into the end of 2023. The dollar, in fact, opening the year with the biggest gain since October, and we're really kind of watching that risk-off sentiment play out here. Dollar yen is holding at just shy of that 142 level. There was the biggest intraday gain for the dollar since October, as we saw those higher bond yields, some of the geopolitical stories playing in there as well. The Aussie dollar, though, still holding on to some of that upside momentum. 67.65 is where we're at. A lot of this good news story being driven by more optimism over China, despite the sluggish eco indicators that we continue to get. We're seeing a lot of these proxy assets like the Aussie, like other commodities, currencies and iron ore trading quite well at the start of this year. We'll be watching Chinese stocks for sure following their worst start to the year since 2019. Economic headwinds, of course, continue to persist. Our managing editor for Asia Stocks, Lian Tu, joins us now. So, Lian Tu, we were just talking about this with John Liu earlier. New year, same old entrenched problems for the Chinese economy. We are seeing more policy support, though. Is that going to be enough to change confidence?
Yeah, I mean, at this point, I think we need something a little bit bigger. China did come out with a data about $15 billion worth of low-cost loans to policy-oriented banks to support infrastructure as well as affordable housing. But market reaction, if you look at the Golden Dragon Index overnight, was down more than 3%. So investors are not really buying that. And on the positive side, there was some reporting or news reports about online gaming overnight. Reuters reported that a top official overseeing the gaming sector was removed after the shock regulation that came just ahead of Christmas. That could be a positive sign for investors, showing that the regulators or Beijing at least cares about investor reaction, because that shock regulation did erase about $80 billion of gaming share valuation.
Yeah, team, we saw long-only global fund managers dumping Chinese stocks last month. How significant was that? And is that sort of a preview of what we can expect this year?
Yeah, it's really a continuation that we've seen in months, if not years. Morgan Stanley's quant research showed that long-only investors sold about $4 billion worth of Hong Kong and Chinese shares in December, and that marks the third biggest exodus of all times, only after the onset of the pandemic and the yuan devaluation month. So that's actually a huge sell-off. And then what's new here is also European investors, which had been more slowly versus U.S. investors in cutting Chinese shares, now is catching up with the kind of sell-off. And if you look at northbound flow yesterday, that was a big sort of outflow yesterday as well. So we're not seeing any slowdown in kind of foreign exodus at this moment.
Bloomberg's managing editor for Asia Stocks Lending too there with the latest. And this is a picture as we look across this futures trading across some of these markets that will come online in the next half hour or so. And of course, these prospects when it comes to Chinese equity staging a turnaround doesn't seem to be taking much of a cue when it comes to the $50 billion injection from the government into policy banks. It does not seem like that will be kind of a big enough kitchen sink measure to turn the sentiment around. We are seeing a little bit of weakness there when it comes to S&P futures. Of course, when it comes to the broader markets in the US, that was the lead that we took. Stocks and bonds dropping in tandem for the worst start to a year in decades. So that PAM markets year-end rally didn't really pick up where it left off, and in fact went in the opposite direction. One of the worst ever concerted drops across both asset classes to start any year. We are seeing a little bit of pessimism when it comes to TAIEX futures, down by almost 1% there, and we're watching dollar China trading as well. The currency side of things when it comes to the Chinese currency has been holding pretty steady, but potentially we see the impact more there of the gains that we've seen in the greenback, with the dollar opening the year with the biggest advance since October. That is it for Daybreak Asia. Markets coverage continues. This is Bloomberg.